At Scube Wealth Grid, we understand that while most investors fear market corrections, smart investors see them as rare windows of opportunity, moments when emotional panic distorts valuations and the market temporarily forgets the fundamentals. A correction, typically defined as a 10-20% drop from recent highs, can feel unnerving, but it's also when some of the most lucrative investment moves are made. In 2025, with rising interest rates, persistent inflation shocks, geopolitical tensions, and over-leveraged sectors creating volatility, it's crucial to shift from fear to strategy. First, smart investors enter corrections with cash reserves ready. Not all their capital is tied up, because they understand that liquidity is opportunity when prices drop. Second, they don't attempt to catch the bottom, they build positions gradually through dollar-cost averaging, buying high-quality assets in tranches to reduce timing risk. Third, they focus on resilient companies with strong balance sheets, consistent cash flows, and dominant market positions. The kinds of businesses that not only survive downturns, but often come out stronger by gaining market share. Corrections also offer a chance to rotate out of overvalued speculative holdings and into undervalued sectors or geographies that are temporarily beaten down but have long-term upside, like emerging market ETFs, REITs, or specific blue-chip tech and infrastructure plays. For the real estate investor, corrections in the public markets often signal coming soft spots in private markets. This is when off-market property deals, distressed assets, or motivated sellers start to appear, offering significant negotiation leverage. For long-term investors, corrections also offer tax loss harvesting opportunities, allowing them to realize losses for tax benefits while reinvesting in similar assets to maintain exposure. And for those investing through retirement accounts, corrections are a gift. Buying more shares at cheaper prices accelerates long-term compounding. Beyond asset purchases, smart investors use corrections to rebalance their portfolios, trimming positions that grew too large during bull runs and reallocating to areas now undervalued. Emotionally, they stay grounded by reviewing their investment thesis and time horizon, reminding themselves that volatility is the price of admission for superior returns. History shows that every correction has eventually given way to a recovery, and those who stayed the course or leaned in with discipline reaped the rewards. But none of this works without preparation. Before a correction even begins, smart investors build watch lists, maintain dry powder, have risk parameters in place, and know exactly what they're looking to buy when panic sets in. At Scube Wealth Grid, we help investors not just survive corrections but capitalize on them. Because true wealth isn't built when markets are calm. It's built by those who act wisely when others act emotionally.